The thing is, there are certain downsides to multifamily investing. I want to talk to you guys about 3 things that you can't get through apartment buildings. Hey guys, Matt Faircloth here, and I'm super proud to say that our company, the DeRosa Group, is working with over 600 investors, over $50 million worth of investors' capital that's working with the DeRosa. Super grateful for that capital, to have those investors as our friends and our business partners for the work that we do. And a lot of the work that we do is in multifamily, real estate, housing for people. It is part of our vision to transform lives through real estate, and multifamily is the best place to do that as an investment, as a static investment vehicle. What's great about multifamily is it has lots of tax benefits through cost segregation, depreciation losses, and thanks to forced appreciation that we can do through making the property more profitable, those properties become worth more and more over time. And any investor in a multifamily asset like that gets to enjoy appreciation and those tax benefits and cash flow, doing good work by transforming lives through real estate along the way. The thing is, there are certain downsides to multifamily investing. I want to talk to you guys about 3 things that you can't get through apartment buildings. You cannot compound your returns. You can't roll your cash back in. And if you're involved in a multifamily investment, you can't take your money and enjoy one of the greatest things about investing. And I talk about it in Raising Private Capital, which is the ability to compound your money. And let's say you're invested in something that produces a return of $2,000 in a quarter. That $2,000 has to come back to you. You got to put it in your pocket or put it in something else. You can't roll it back into that investment and have that $2,000 earn along with your other money you have invested there. It's called compounding, reinvesting. You can't buy more of the apartment building, right? It's not like they're going to go and build more apartment building for you to reinvest in as your returns come in. You can't get your money back when you want it. It can be done, but it's very hard to do. Every once in a while, we have an instance come up where an investor comes to us and says, "Hey, Matt or DeRosa team, I need to get my money back because life happens, because a thing has happened, because I lost my job, or because my kid's going to college, or because I want to move, or because whatever." And it's hard to get that money back through a multifamily investment. It's not liquid, let's say, unless the property sells or unless you can find someone that is willing to buy your equity for you. And the best way to get your money back in a multifamily investment is to wait for the property to sell or refinance to get your capital back. Number 3, multifamily typically doesn't cash flow very well right as soon as you get in. It's a slow grower, slow build over time. It can be a long investment where you're waiting for that appreciation to kick in, while you're waiting for the market to be solid enough that you can sell that multifamily asset. People know that if you invest in a multifamily asset, it's a long-term ride. The best way to get it back is when the property refinances or when the property sells. That's just understood, and it's in all of our agreements. But I still understand that there is sometimes a need for a more liquid investment for people to get into. They can put it in for as long as they want and then get it back whenever they want to get it back. There's other investment vehicles out there that is a great complement to multifamily. Something that's really necessary in a changing economy is short-term bridge debt. Let's say someone's buying a dilapidated property and they're going to fix it up and sell it, or fix it up and refinance, a BRRRR strategy, or whatever they're going to do. They need some short-term bridge capital to get them from here to here, right? And DeRosa Group has borrowed quite a bit. First got started, we did lots of fix and flips. We used quite a few private investors that have lent us short-term bridge capital like that. The benefit to investing in short-term bridge capital is a complement to multifamily in this way. It is liquid. As much as multifamily is not liquid, short-term bridge debt is liquid, because any investor that's borrowing short-term bridge debt is going to do their best to give it back to you as soon as possible. So the money cycles back and forth between the lender and the borrower on a regular basis. The typical short-term bridge loans that we're talking about go between 4 to 9 months, maybe. So for that reason, when you want your money back when you're investing in a vehicle like that, you can get it back. Number 2, you can compound your returns. In a multifamily, if I go and pay an investor a preferred return or a rate of return on their capital or an equitable distribution, that money that they get just has to go back into their pocket or back into their IRA or back into whatever it goes back into. They can't roll it back in and buy more shares of the vehicle that they're in. That's okay, but it also in some ways in a self-directed IRA or just in an investment that you want to kind of set it and forget it, it kind of creates a problem on a quarterly basis or a monthly basis when you pay those distributions. If the investor doesn't necessarily need the money for their spending needs, it's actually much better and it grows much faster if they're able to roll it back into the investment and compound it and allow those interest returns that they get to grow on top of themselves. It's an open fund. You can put more money in, and that money that gets put in just gets released into the next short-term loan that may come up. The ability to compound your returns is available on a short-term debt fund. And I'm excited to tell you guys that we're going to be providing an investment vehicle that's going to provide short-term bridge capital to developers and investors all across the country, the DeRosa Income Fund. This fund is invested in short-term, not long-term stuff like multifamily. It could be 5-10 years for it to achieve the appreciation goals. The DeRosa Income Fund is invested in short-term stuff, timed in months, not years, okay? Investments with the DeRosa Group, transforming lives through real estate is our number one priority. It is why we do what we do, because we believe that real estate investing as a vehicle can create good in the world, and it can create jobs, and it create housing, and it can create stabilization for the economy, and it can create all kinds of great things that everyone gets to benefit from, while we also create a phenomenal rate of return for our investors. We've been doing this for 18 years, and we've seen many of examples of how transforming lives through real estate is alive and well in real estate investing, and investors can make phenomenal returns while they make a difference. It's already at work, and it's already doing good, and already making loans, and already originating returns for investors. And there's an opportunity for you guys to join us now on the DeRosa Income Fund. We'll offer compounding returns. It will offer the ability for you to reinvest as you want to, and it'll offer the ability to have liquidity. If you want your money back, you can get it back under certain terms that are defined. Quick tip, guys. If you invest in something that compounds on an annual basis, if you take the number 72 and divide it by the interest rate of that investment that you have. So let's say something's returning at 8%. If you take the number 72 divided by 8, that's how long it takes that money to double. If you're not good at math, the answer is 9. So it take 9 years to double. So you put 100K into an investment that's returning 8%, such as the DeRosa Income Fund is, and DeRosa Income Fund's returning more than 8%, and it's also compounding more than annually. So it will grow faster than that. So bottom line, an investment in the DeRosa Income Fund will double up in at least 9 years, if not certainly faster than that. That's what's great about it. I'm super excited. It's something that a lot of folks have already joined us on, but we do have more room because we're looking to grow this vehicle to a larger and larger size for projects that we can invest in. So hope you guys can decide to join us at DeRosa Income Fund. Thanks for watching this.
What's up, guys? Matt Fairclough here, and I'm here in Northern Liberties, Philadelphia, and we are at this great warehouse. This was everything from a printing company to even a restaurant, but this property is just pure potential, and DeRosa Income Fund is super excited to be funding the pre-development work here at this project.
Hey guys, thanks for watching. Click the link or go to DeRosaGroup.com/DIF. Take the next steps and to hear more of what we have to offer.